Sense and rabbit talk. The Zenith Bank started let's say 1 year and over now.
Before Zenith Bank came here, we were not having registered companies. So we were not registered on the Forestry Commission as a lumber producers and sellers and furniture making people.
Zenith Bank, eba mabra bumuno. Omo na kire yen say, say we business we register ampa. Yako omo invite register general for baha abe register your business nyina mayen. Ena omo kire yen kwanya ye fa so ye banking and also abe boa yen ama ye business no konanim.
So after we Zenith Bank helped us to register our companies, TIDD, which is Timber Industry and Trading Company, to register us on their platform. So when we buy the goods from sawmill coming, they know that we are a registered company dealing with lumber.
Senya Zenith Bank enka mini register mini business accounts bia. Omo bie MIN. Etisi ano seminar bia na ama medino call me das ventures no appear our internet se me bia meko bia no internet call me das enya Zenith Bank nka medino academy.
Everybody who has a company, enterprise and everything have to go to Zenith Bank and then seek their advice and then save with them because they are a very good bank.
Kakra metimi aka atere obi a afina all start business say Zenith Bank ehia say we a company kese anaso ye ketwa oben ona say oben ona o kan wasem troma emu bi omo be boa ema o company no abefo ebetumi atumpon akona nim o matranse a chechero enyama ni so ama won say enye company kese nko a small scale so obetumi akọ atumi abie na o register na ama o company no ma chechero ma ama o company na e grow ama aye krabahwe
me ka kire obi a wo ye business say eye won nketua mu o kasie mu o one Zenith fo tu anamo a ebeboa bebre efi say omo ya boafo omo ba wabrabo mu a omo behwe o business say na emu na omo be monetize ebema o business akoso.
I'm the chairman of Moose Timber Market Association. I see to the welfare of members in the market and also coordinate between the market and then the Forestry Commission and then TIDD and various timber associations in the national level.
You manufacture doors, base, and you sign ton in the but you call or you clap in the normal the blame and sanay your ton. But don't there, wooden doors on the yarn there, you manufacture a young work answer your process and your rabbit ton. The Zenith Bank started let's say 1 year and over now.
Before Zenith Bank came here, we were not having registered companies. So we were not registered on the Forestry Commission as a lumber producers and sellers and furniture making people.
Zenith Bank eba mabra bumuno. Omo na kire yen say say we business we register ampa. Yako omo invite register general for baha abe register your business nyina mayen. Ena omo kire yen kwanya ye fa so ye banking and also abe boa yen ama ye business no konanim.
So after we Zenith Bank helped us to register our companies, TIDD, which is Timber Industry and Trading Company, to register us on their platform. So when we buy the goods from sawmill coming, they know that we are a registered company dealing with lumber.
Senya Zenith Bank enka mini register mini business accounts bia. Omo bie MIN. Etisi ano seminar bia na ama medino call me das ventures no appear our internet say maybe ameko bia no internet ko me das enya Zenith Bank nka medino academy.
Everybody who has a company, enterprise and everything have to go to Zenith Bank and then seek their advice and then save with them because they are a very good bank.
Kakra metumi aka akyere obi a afi na all start business say Zenith Bank ehia say we ye company kese anaso ye ketwa oben ona say oben ona oka wasem kyerɛ ma emua bi a wɔn bɛboa ɛma o company no abɛfo ebetumi atumpɔn akɔ nanim ɔmo tena se akyerɛkyerɛw enyama ni so ama wɔn sɛ enye company kese nko a small scale so obetumi akɔ atumi abie na register na ama o company no ma kyerɛkyerɛw ma ama o company de agro ama ayɛ krabahwɛ
me ka kyerɛ obi a wɔyɛ business sɛ ɛyɛ wɔ ne nketewa mu o kɛseɛ mu o one Zenith fo tu anamo a ɛbɛboa bebree efi sɛ ɔmo yɛ aboafo ɔmo ba wabrabɔ mu a ɔmo bɛhwɛ o business sɛ na emu na ɔmo bɛ monitor ɛbɛma o business akɔ so.
Thank you very much. Welcome back from our spotlight story. It showed how Zenith Bank partners with other institutions in terms of not just banking, but even with business registration and all. That was very good from us. We would like to quickly apologize for the small technical hitch we had, but that notwithstanding, we are back live on our social media handles. We are live or streaming live on YouTube and on Facebook. So kindly join us, reach out to others to join us as we move to our second hour session that promises to be another engaging and insightful one. So I would like to quickly move to that. We have Mr. Lawrence Hochonyame Esquire. He is the Assistant Commissioner of GRA. He is also the head of the Domestic Tax Technical Training Unit. Mr. Hochonyame and the team, if you can hear us, kindly have the floor.
Thank you very much. Good morning to... Please, can you hear me?
Yes, please, we can hear you. Good morning, sir.
Yeah. Good morning to your cherished customers. That also happens to be clients to Ghana Revenue Authority. We are honored this morning to share some practical tax issues with them. I want to start my presentation by quoting a famous American statesman, Benjamin Franklin, who said that years back that there are only two certainties in life, and the two certainties are death and tax. And so when you living on this earth, you by all means pay taxes and you by all means die. So there are two certainties in life. All right, so by saying that, I just want to go straight to my presentation. I'm doing this presentation for on behalf of the Commissioner General of Ghana Revenue Authority, Anthony Kwesi Sapon. We just want to give your customers and our clients some tax education or what would give them opportunities to grow. I want to start by saying that the Ghana Revenue Authority is the sole government institution that is responsible for the administration of all taxes, both direct and indirect taxes. And the law that established GRA was passed in 2009 at 791. And that empowers the authority to administer all tax types. And so as a consequence to the establishment of GRA, we administer all the taxes in this country. Now, I just want to pick the taxes that we administer one after the other to throw light on the taxes that are administered by GRA. The first one is the income tax, and the income tax is governed by the Income Tax Act. Now, when you come under the Income Tax Act, income has been classified into three main categories. The first one is employment income, the second one is business income, and the third one is investment income. So when you earn any of these three classes of income, you are liable to pay taxes in Ghana. Employment income basically relates to all payments or all earnings relating to one's employment. Salaries, allowances, bonus overtime, benefits in cash and in kind that relates to employment all fall under employment. And so the bottom line is that all salaries, wages, allowances, fees, commissions, gratuities, ex gratia, all of them are taxable under the employment income. And when we pick employment income, we are looking at two obligations, obligation on two persons. The first obligation is on the employer, the one who employs the individual to exercise employment, and his obligation is to withhold the taxes and pay to GRA. And then the second obligation is on the employee. So the employer has an obligation to withhold and pay, and then the employee also has the obligation to file his or her annual returns at the end of the year to disclose his gross income so that we can finalize his or her assessment. So that is the first income under the Income Tax Act, which we call the employment income. Then we also have what we call the investment income. The investment income relates to what we call the passive income. So interest payments to some categories of persons, dividend payments to shareholders, royalty payments to either resident or non-resident persons, rent income, natural resource payments, all of them come under investment income. And so any person or individual or company or trust or partnership that earns any investment income, i.e. interest, dividend, royalties, natural resource payments, rents, all of them qualifies to pay income tax. And then the last one is business income. Business income basically relates to those who are engaged in trading or those who are providing any form of service. So when you are engaged in trading or you are engaged in any profession or vocation, the law says you are conducting business, and business income of any kind is taxable. And so under the Income Tax Act, we have these three categories. Now, to narrow it down to the specific tax types, under the business income, for example, all companies pay what we call the corporate income tax. So when you are a company, your profit at the end of the year, your gross income after you have taken out all expenses, we call the net or the residual income, chargeable income after you have taken out all expenses. We calculate 25% of that, the residual income or the chargeable income, and that becomes your corporate income tax. And then individuals also pay the personal income tax in the form of PAYE or taxes paid by sole proprietors. Then we have withholding taxes. Withholding taxes are arrangements that businesses have with third parties. So when you are a business, you are a company, and you are dealing with third parties, the law requires you to, in the process of making payments to the third parties, the law requires you to withhold the appropriate taxes and pay to GRA. I think I'll take my time to go into details, the various components of taxes that falls under withholding taxes. And so these are some of the taxes that we administer: corporate income tax, personal income tax, withholding taxes. Or if you're a company and you dispose of a business asset or a capital asset, then you made a gain on the realization. Let's say you bought the asset 3 years ago at 100,000, but when you were going to sell, you sold it at 150,000. You might have made a gain of 50,000. That gain is what we call the capital gains or gains on the realization of assets. And so when you dispose of a business asset and made a gain on it, that gain is also treated as part of your business income. So one other type, that tax type we administer, is what we call the capital gains tax. And all these taxes are falls under the income tax category. The next important taxes that most of your clients are required to pay is the value-added tax. Now, I'm very glad to announce that the old law, the VAT Act 2013 at 870, was repealed last year. So effective this year, we have the new VAT Act. That's the Value Added Tax Act 2025, Act 1151. So Act 1151 repealed at 870. And so what are some of the things the new law has introduced? One, it tries to eliminate or remove all distortions under the old law. So the old law, we operated the old law or implemented the old law close to about 12 years. It was passed in 2013 and it was repealed in 2025. So close to about 12, 13 years we're operating it. And it has gone through a lot of amendments, and some of the sections indeed lost its practicability. And so 870 was repealed and replaced by the new law 1151. One of the things that the new law did or introduced was to revise the threshold for VAT registration. Now, for you to register for VAT, your annual, under the old law, your annual turnover should exceed 200,000. So that when you make an annual turnover of exceeding 200,000, then the law requires you to register for VAT. But when your turnover falls below 200,000 under the old law, you are not required to register for VAT. Now, with the new law, the threshold has been revised from 200,000 to 750,000. So it means that when you are a trader or you are providing a service and your annual turnover does not exceed 750,000, you are not required to register for VAT. The threshold for VAT registration is 750,000. And so persons whose annual threshold fall below 750,000 falls outside the scope of VAT. The second feature of the new VAT Act is that it has abolished COVID-19 levy. The infamous COVID-19 levy was abolished. The VAT rate still remains at 15%, and then we now maintain two levies. The two levies are the Get Fund levy and the National Health Insurance levy, which also are 2.5%, 2.5%. So when you add the levies to the VAT, which is at the rate of 15%, it gives us a total rate of 20%. But with the change of the computation, the base on which VAT is calculated, the effective rate of VAT, which was 21.9%, has now been reduced to 20%. With the redefinition of what we call the taxable value or the base on which VAT is calculated. And so, like I indicated, all taxable persons or persons whose annual turnover is less than 750,000 are not required to register for VAT. And then persons that are engaged in exempt supplies also fall out of scope of VAT. So it's important the exempt supplies are provided for in the first schedule of the VAT Act. And so if you want to find out whether the goods you are supplying or the service you are providing for, or the service you are providing is exempt from VAT, please just go for the VAT Act, the new law, go through the first schedule of the new law. It gives the supply of goods and the supply of services that are exempt from VAT. And when your goods or your service falls in that category, then you are out of scope. In other words, persons that deals with exempt supplies are not required to register for VAT. Another feature the new law introduced was that the new law abolished the flat rate scheme. Why? The flat rate scheme was a rate of 4% that was slapped on any sales that they make. Now, when you compute 5% or 4%, that's the 3% flat rate plus 1% COVID-19 levy, which gives us a total of 4%. Under the old law, traders could not claim that 4%. There was no opportunity for traders to claim that 4% when they calculate it on the charge VAT on the supply of goods or services that they provide. And so the 4% that they charge on VAT continues to be factored into the cost of the item. And so indirectly it was propelling or creating what we call cascading effects, because I mean they have no other way to claim it. Now, under the new law, the flat rate scheme has been abolished, and we have now introduced what we call the standard rate scheme. And so all our taxpayers must charge and account for VAT on a standard rate. And what does it mean? The standard rate simply means that there are two components of VAT. The first one is VAT on your purchases, which we call the input VAT, and then the VAT on your sales, which we call the output VAT. And so it is the difference between your input and your output that you account for. So under the new law, all the levies are claimable. All the levies now, the COVID-19 levy, the National Health Insurance levy are all now claimable as input. But under the old law, those levies could not be claimed. Nobody can take advantage of those levies and claim them as input tax. Now the new law has made it possible that anybody that pays COVID-19 levy or National Health Insurance levy can conveniently claim it as input tax. And any VAT on your purchases also qualifies to be claimed as input. Then the last introduction was that the taxable value itself has been redefined. Under the old law, all the levies that we calculate, we first have to add the levies to your costs, the cost of the item, before VAT is calculated. So the taxable value was defined to include the levies. Under the new law, the taxable value is defined to exclude the levies. And these are very, very major introduction by the new law, Value Added Tax Act 2025 Act 1151. Then finally, the scope of supplies that are zero rated have been expanded. So all supply of goods or supply of services that are exported or supply of services that are consumed elsewhere other than in the country, all those exported services are zero rated. Zero rated supplies are provided for in the second schedule of the VAT Act. And so these are the innovations or the changes that the new law has introduced. And the issues of cascading effect arising out of the fact that the clients are not able to claim input taxes on the levies and all those things have now been eliminated. Now, the third tax type that I want to just break down again into for the understanding is withholding taxes. Now, what is the withholding tax concept? Withholding tax basically is an income tax provision. And it says that when you are a trader, a company, and you are dealing with third parties, maybe you have engaged the services of a lawyer or a consultant, or you have engaged the services of an auditor or an accountant, or you have procured goods from somebody, or you have engaged somebody to come and build your head office for you. The law says that when you are making payments to such a person, the law provides that the agent or the company that is making payment must withhold the appropriate taxes and pay to Commissioner General or pay to GRA. So, for example of withholding taxes is interest. So, for example, if a company or a bank is paying interest to a company, let's assume a company has invested in a bank, a fixed deposit, or the company has made some financial investments in a bank, and the bank is going to pay interest to the company, the law says the bank should withhold at the rate of 8%. Interest payment to individuals is exempt under that category. So if the bank is going to pay interest to an individual, maybe an individual came to buy maybe savings account or fixed deposit account or treasury bills, and interest is going to be paid to individual, that interest payment is exempt. But interest payment to persons other than individual is subject to withholding tax at the rate of 8%. All companies that pay dividend to their shareholders, the law requires you that when you are a company and you are paying dividend to your shareholders, you withhold 8% and pay to Commissioner General. All those who use intellectual properties, the IPs or royalties from either resident or non-resident person, when you are going to pay royalties for the use of the IP or the intellectual property, such as patent, copyright, trademark, the law requires that when you are making payments in the nature of royalties, you withhold 15% and pay to the Commissioner General or pay to GRA. Then rent. Those who are in a rented premises, when you rent premises for business and you are going to make payment to your landlord, the law requires that you withhold 15%. You withhold 15% and pay to GRA. And the payment, all the withholding payment should be made on or before 15th of the following month. Then the last one is the natural resource payment. The natural resource payment also is subject to a withholding of 15%. All these withholdings relates to what we call investment returns withholding, interest, dividends, rent, natural resource payment, and annuity. Now, in addition to withholding relating to investment returns, when you supply of goods, or you procure goods from anybody and you are going to pay, the law says the goods should be subject to a withholding of 3%. When you engage anybody to build or to engage in construction works or any activity that qualifies as works, the law says when you are making payment to that person, withhold 5% and pay to GRA. And anybody that is providing you with a service, if it's a company, whether that service is a legal service, a security service, or a consultancy service, any service that is provided, the law says that you need to withhold 7.5%. So supply of goods is 3%, supply of works is 5%, and then supply of service is what? 7.5%. Now, but when this same supply of goods is made by a non-resident person, supply of works is provided by a non-resident person, or the supply of service is provided by a non-resident person, all of them go for what? 20%. 20%. Now, for the SMEs, I want to quickly look at what we call the taxation of sole proprietors, which we call the modified taxation. Now, all our sole proprietors have been categorized into three categories. So the first category, your annual turnover should not exceed 20,000. And so that category, we call them presumptive taxation based on installment. That category, they pay a flat rate of 25 cedis a quarter up to 45 cedis a quarter. And all our micro businesses by the roadside, the watches sellers, the kinky sellers, the Momo transfer, all of them fall in that category. So when your annual turnover does not exceed 20,000, you just go to GRA, get registered. We'll just use an app to register you, and then you pay taxes on quarterly installment. And the taxes range from 25 cedis a quarter to 45 cedis a quarter. Then the second category of sole proprietors are those who pay what we call the turnover tax, or the presumptive taxation based on turnover. So when you fall in that category, your annual turnover or your annual income must be more than 20,000, but not exceeding 500,000. And so when your annual turnover falls in there, all you have to do is to give us your annual turnover. First, register with GRA, give us your annual turnover, and we just calculate a tax of 3% on your annual turnover, and that becomes your tax liability. And it is self-assessment. You just give us your annual turnover. And then the last category are individuals who wants to claim the allowable deductions. And so if you incur an expense and you want to claim it, or you belong to a professional group or something, then all of them will come under the standard rule. We determine the assessable income, we take out the allowable deductions, and we arrive at what we call chargeable income. So all sole proprietors are taxed at, are categorized into 3 levels. Category 1 is presumptive tax based on installment. Category 2 is presumptive tax based on turnover. And category 3 is presumptive modified cash basis. Now, I think that the time is very short. Partnership in Ghana, we don't tax partnership at the entity level. We tax partners of the partnership. So we tax partners of the partnership. Companies, we tax companies' corporate income. And then the shareholders, we tax their dividend. Charitable organizations such as NGOs and religious institutions and so on, when they carry out business, the law says their business income should be taxable. The law says their business income should be taxable. So what obligation are we looking at? All our taxpayers have 4 primary obligations. They must register with GRA, they must file returns, they must pay their taxes on time. All taxes have due date for payment, and they must make honest and accurate disclosures. And then some of the businesses that enjoyed reduced tax rates are the ones I'm going to mention. So if you are into farming business, they enjoy a reduced tax rate of, let's say, 5%. Fish farming, livestock farming, all of them enjoy a reduced tax rate of 5% for the very first 5 years. If you're into agro-processing business, they also enjoy a reduced tax rate of 5% in the first 5 years. When you're in a cocoa byproduct business, they enjoy a reduced tax rate of 5% during the concession period, 5 years. Free zone, the free zone businesses, their first 10 years corporate income tax is exempt. Then the young entrepreneurs, the SMEs, all young entrepreneurs below the age of 35 years who carry out businesses, specific selected businesses, such as agro-processing, ICT, horticultural, traditional, creative art, all of them, their first 5 years income is exempt from tax. Manufacturing businesses enjoy what we call the location tax incentive, depending on where the manufacturing business is located. The private investors enjoy what we call conditional exemptions. And then non-traditional exports enjoy a reduced rate of 8%. Other incentives that are available to all businesses are capital allowance, the allowances that are granted on the use of depreciable assets. All businesses are also permitted to carry forward their losses. And then any taxpayer that makes excess tax payment qualifies for what we call a tax refund. On that note, I've been signaled that my time is up. I'll pause here, and maybe when the opportunity presents itself and you pose your questions, I'll be more than glad to respond to your questions. Thank you very much.
Thank you very much, Mr. Lawrence Hochonyame. That was a very deep and revealing session. I think on this one, I may have to put in a case for our listeners, and I'm very sure they will side with me. That Zenith Bank, please, let's have another time with especially the taxman, given that even as we move into the Q&A, a lot of the questions revolve around him. It seems that people really need answers to some of the questions. And Mr. Hochonyame, you actually started your presentation. We only knew of one certainty in life, but you added that the tax is a pure certainty. So now we know, so long as we live, we have to pay our tax as well. Picked up some few points that you mentioned in terms of employment tax, investment income tax. Another revealing one you mentioned was the young entrepreneurs exemption. which I'm very sure there are some people here who would want to take that up as well. You mentioned about the new VAT law that gives certain thresholds, move the threshold from 200,000 to 750,000 and the likes. Yes, as we said, we are having a very insightful session, and I'm very sure people who would even go back and watch on our social media handles would approach some of your officers for detailed information, and I'm sure of that. We'll quickly move into the Q&A session. We have quite a number of questions coming through. There are some of the questions that have been answered already with the team on standby, as I mentioned earlier, that we have our group head marketing on standby to answer some of the questions that are related to Zenith Bank. So those ones have been mentioned, but we do also have some questions that are directed to our resource persons here, and I would like to take up those questions. The first one came in from Andrew Kofi, and this one is directed to you, Mr. Hochonyame. I must say that most of the questions currently are directed to you, so kindly be on standby for us. Probably I'll pick it minimum two at a time so that we can save on time. So I'll start with the one from Andrew Kofi. He says that, please, how does a person considering a side business start and handle regulatory compliance, especially compliance around taxes? Sometimes the registration and application fees or taxes to start and work, and he puts it in quotes, cleanly. That means to work clean with no issues by paying all your taxes, etc., are just not worth the effort and profit. So Andrew Kofi wants to know, how does a person considering starting a fresh business go around setting up a clean business by paying all his taxes? I'll pick the next two, which is from another customer watching, Andy Kisi, so that Mr. Hochonyame, you answer the three together. Andy Kisi's first question is it true that a newly registered business is not required to pay taxes during its first year of operations? If so, what are the specific conditions and exemptions that apply? Is it true that a newly registered business is not required to pay taxes during the first year of operations? If so, what are the specific conditions and exemptions that apply? His second question is, many small business owners face challenges when dealing with tax registration and compliance processes. Why do some interactions with GA officials appear to make onboarding difficult? And what measures are GRA putting in place to simplify the process and improve the experience for startups and SMEs? Thank you very much, Mr. Hochonyame. I would like you to take these first three, and then we'll come back to the next set of questions.
All right, thank you very much for those questions, Andrew. Regulatory compliance, and then I think that very question ties in with the last one, challenges with tax registration.
Yes.
I think that one of the obligations that our taxpayers have with GRA is to register. Now, registration has two legs. The first one is what we call the TIN registration. The TIN registration, all individuals now, all of us as individuals or employees, all of us, our Ghana card number now represent our TIN. And so in GRA, we know you not by your name, but we know you by your Ghana card number if you are an individual. And if you're a company, a limited liability company or a company limited by guarantee, the TIN is generated at the point of registration at the office of the registrar of companies. So that is the first leg of the registration, which we call the TIN registration. The second one is what we call the tax type registration. The tax type registration. And that one, it depends on the tax type that you qualify to pay. If you are a company, for example, you automatically qualify to register for corporate income tax. If you are an employee, for example, you qualify to register for PAYE. If you are a businessman or a sole proprietor, you qualify to register for PIT. If you trade in supply of goods that are VATable, or that are supposed to falls within the scope of VAT, then you register for VAT. The good news is that the registration with GRA comes at no cost. It comes at no cost at all. And so the registration process doesn't come with any costs. I mean, there are some forms that you would have to complete and then submit. Even now with the modified taxation, the registration is just seamless. It is done on phone. You just give us your name, your Ghana card number, your location, where the business is located, and possibly your turnover. Once you give us this information, the registration is done instantly. Right in your presence, the registration is done. So the registration process with GRA ought not to be complicated at all. And if you go to any of our offices and you want to register for any tax type, and you suspect or have reasons to suspect that anybody wants to put an impediment on your way, just request to see the office manager. Just request to see the office manager. Walk straight to the office manager's premises and inform him that you are here to register, but you are not too very comfortable with the process, because the process is seamless, the process is easy and very simplified. I don't think that it comes with any complexities at all. And so anybody who wants to register with GRA under the modified taxation, very, very simplified approach. Maybe under the VAT Act, we may need your location, the business location, where you are doing business, your address, and so on, the digital address, and so on and so forth. And so that is it. The registration process is very, very simplified process. And like I indicated, anybody who is having any challenges registering in any of our offices can just go straight to the office manager and lodge that complaint. The second question is whether it is true that newly registered businesses are exempt or are not required to pay taxes. The law is so clear. For example, if you are a newly registered company and you fall within the VAT threshold and you supply goods that are supposed to charge, you are supposed to charge VAT, from day one of the business, once you sell, you are selling, the law imposes an obligation on you to charge. So even though you are a new business, so long as you are providing a taxable supply of goods or a taxable supply of service, and it all falls within the scope of VAT, you cannot argue that because you are a new business, you should not charge the VAT. So from day one, anybody you sell to, the law imposes an obligation on you to charge and account for. When we come to corporate income taxes, the law allows our taxpayers to do what we call, to provide what we call estimates. So when the year starts, let's say you start a new business, the law allows you to provide what we call an estimated income, or which we call the self-assessment. The bottom line is that now all our taxpayers are required to self-assess. The Commissioner General doesn't come to, or the GRA doesn't come to raise an assessment on you. And so when you start a new business and the law does not specifically grant you that exemption for the first few years, then you would have to self-assess yourself. And the self-assessment means that you indicate your own estimated income for the year, your own estimated tax payable for the year. You do your own declaration and tell the GRA what you think you can pay. And then when the year ends, we can now come back and conduct an audit for you. But like I indicated in my presentation, there are some businesses that the law specifically grants few years of exemption. For example, young entrepreneurs engage in selected businesses like ICT business, agro-processing business, creative art business, all those young, the first 5 years, they are outrightly exempt. Or you are engaged in a free zone business. The first 10 years, you are exempt from corporate income tax. So if the law says so, if the law indicates that your business is specifically exempt, then you fall in that category. Other than that, you would have to do what we call self-assessment and disclose your income, your projected income for the year, and pay taxes accordingly. Thank you.
We are very grateful. We move on to the next set of questions quickly. We are picking from Naomi Efa, and her question is, with regards to the threshold of 750,000 Ghana cedis, does it apply to both services and goods or just for those selling goods? And then we move to Christian Amwakohine, and he wants to find out the tax taken when a business sells an asset and makes profit after a period of time. Does it take into consideration inflation? A business acquires an asset 10 years ago for 100,000 and sells at 120,000. Will the tax take inflation over the 10 years into account? And please permit me to add the last set. That is coming from the last question for this set. That comes from L. Hamlet. He says, would you be able to speak to external companies as well? Thank you very much, sir.
All right. Thank you. The first question, the VAT threshold applies only to supply of goods. The VAT threshold is not applicable to supply of services. So services provided of any amount would require that you register and charge for that service. So that first question is answered. The question on disposal on assets, the law has not provided for inflation, but the law has provided other ways that could cushion the taxpayer. So when you go to Section 36 of the Income Tax Act, the law provides that when we are determining the cost, so the formula for calculating capital gains is the consideration received minus the cost. So the cost, and the cost is defined as the cost of acquisition, the cost of improvement, or the cost of maintaining the asset, and then the cost of realization. So it means that the cost that you incurred in acquiring the asset plus any cost you have incurred in improving the value of the asset, plus any cost you incurred when you are disposing of the asset. Let's assume that you engage a sales agent, and you pay the sales agent a commission and all that. All those things goes into the cost build-up. So it is the sum of that that gives you the cost that you deduct from the income to determine the gain. So in the definition of the cost, the law has not provided for inflation, but the law has provided for other ways by which the taxpayers, the period over which the asset was used and being sold, can cushion the taxpayer. So the cost is defined to include the cost of acquisition, cost of improvement or maintenance, and cost of realization, and any incidental cost of acquisition and realization. Then the last question has to do with external companies. Now, external companies are basically non-resident companies doing business in Ghana here. And the law provides that we should treat all those non-resident companies doing business in Ghana here as permanent establishments. So all external companies are treated as permanent establishments. And the tax law says that we should tax them in the same manner as we tax resident companies. So if you are a non-resident company, you are doing business in Ghana, and you have established presence in Ghana, and you have earned income in Ghana, and you call yourself an external company, the law requires that we tax you the same way we tax resident companies. So the same way we'll tax Zenith Bank, or the same way we'll tax any other bank. If you're an external company, the law says we should tax you in the same manner. We determine their gross income, we grant them all the allowable deductions, we arrive at chargeable income, and we tax the chargeable income at the appropriate rate. Thank you very much.
Thank you very much, sir. We quickly move to the next set. We have two from Joseph Tete, another one from Christian, and then we'll pick another one from James Atiga for this set. So Joseph Tete, Joseph wants to find out, please, can you come again with the sole proprietorship taxes? I think a bit of a quick review of that, sir. That's what he wants. We'll pick again. His next question is, last week, I applied to register my business with GRA for sole proprietorship. I was told I will be called, but it's been a week now and I haven't received any call. If I may ask, how long does it take to receive a call from the tax officer? The next question comes from Christian again. Please, for taxes that businesses pay, you mentioned businesses with annual turnover above 20,000 and less than 500,000, you charge 5%. Please, is it on, I guess he wants to know whether is it on just the profit or gross revenue. And then we pick the last one from James Atiga. He says, fees charged by MMDA for business permits should be regulated and checked. Some district assemblies charge up to 5,000 to give business permits to small business owners. So, sir, if you can quickly pick this four questions, we can quickly move to the next four, and I think we may have to get the others answered at appropriate forum as well. Thank you.
All right, so with the one that says that he went to GRA office to register and they asked that they will call him back, and up to now they have not called. I would just drop my number, and if that gentleman can call me, I'll be very much excited so that we get to find out who or which office we can trace it and get it cured. And so I'll put my number on or the the Zenith can share my number, and then that gentleman can come back to me so that we can trace it and see who said that they were going to call him to come back and register, and they have not gotten back to him for the past 1 week. Now, with the sole proprietor businesses, I think that linked to the last question. With the sole proprietor questions, I said that all sole proprietors in this country have been categorized into three categories. And this is what we in GRA, or the law is referring to as modified taxation. The first category is what we call presumptive tax based on installment. And the presumptive tax based on installment is applicable to very micro businesses by the roadside. The organizers, the shoemakers, some of the chop bars, the watches sellers, they fall within that category. And the law says that their annual turnover should not exceed 20,000. So if your annual turnover is within 20,000, you fall in category 1. That is presumptive tax based on installment. And the law says that you should pay a flat amount of between 25 cedis a quarter to 45 cedis a quarter. So that is a very straightforward thing. You just walk to the office and the registration is instant. And then you make your payment every quarter. January, February, March, you pay 25. April, May, June, you pay 25. July, August, September, you pay 25, and so on and so forth. If yours is 45, every quarter you pay 45. Then the second category is what we call the presumptive tax based on turnover. And that one, your annual turnover must be more than 20,000, but not exceeding 500,000. As the law is now, we are even planning to amend the 500,000 to 750,000. But as the law is now, is your annual turnover must be more than 20,000, but not exceeding 500,000. And when you fall in that category, all we need is your turnover. And the turnover is taxed at a rate of 3%, not 5%. I think the questioner says 5%. There is not 5%. The turnover is taxed at the rate of 3%. And so under that category, it is on your gross turnover. If you fall within that second category, the 3% is on your gross turnover. That becomes your tax. So there is no burden on you to submit your returns and claim allowable deductions and capital allowance and all that. It doesn't come in. Because we have realized that most players in the SMEs have challenges keeping records. When they incur expenses, they are not able to keep records. So when you ask them to file a standard returns, it's now becoming very problematic. And so if he's able to tell us his turnover and it falls in that range, we just tax the turnover at 3%, and that becomes the annual income, the income for the year. Then the last category are those that qualifies or are willing to claim their deductions. So you want your annual turnover falls within the same range, but you now wanted to take advantage of your allowable deductions. So if you have wages and salaries, you have paid, you have a maintenance cost, you have rental income, you want to claim as an allowable deduction, then we will allow you to claim all those things as an allowable deduction, and then we'll now tax your chargeable income using the graduated rate. So these are the three categories. The presumptive tax based on installments, a flat amount between 25 and 45. The presumptive tax based on turnover, you give us the gross turnover, we slap 3% on it, that becomes the tax liability. And then the last one is what? The modified cash. With the modified cash, they are entitled to claim the allowable deductions. So we determine your gross income, we take out all your allowable deductions, we arrive at your chargeable income, and we tax the chargeable income using the graduated rate. So these are the three categories that we have for sole proprietors. The question on MMDA businesses that we need to regulate, I think that is just an advice that we need to regulate charges by MMDAs as business operating permit. I think that is an advice. One of the functions of the Commissioner General or GRA is to advise the MMDAs on how to roll out some of these things. So we have taken notice of that advice and we're escalating. Thank you.
Thank you very much, sir. We are very grateful. Indeed, we have a lot of questions coming through, but because of time, we would have to take one last question and wrap up. And then just to let you know, Joel, you asked whether the presentations will be made available. We would liaise with the resource persons, and if the slides are such that we can share. We've realized that you've left your email address with us, and quite a number of you will share that with you. Mr. Hochonyame, what we will do is that for some of the questions that are still related to tax, we would send them to you. Probably you can answer them, and then we would forward it to the people who asked the questions. Albert Zorano, I am sure your question was answered with regards to turnover within 20,000 in his last answer. We picked the last question, and we would like to go to Madam Sumani, Mrs. Sumani, sorry. And the question is legal compliance important for my small business? Is legal compliance important for my small business? Thank you very much, Madam.
All right. So as a small business, legal compliance is very important for you and for all businesses at that. I believe the reason why Zenith Bank chose this topic for today's webinar. The regulator, FDA, the taxman, GSA, EPA, and the likes, they are to regulate the sector. And the regulations with which businesses are supposed to comply with are legal issues. And therefore, it's very important that you are operating within the legal confines of doing business. If you are not paying your taxes, there are penalties within which the commissioner has the powers to apply to you as the owner of the business, and then the shareholders and the owners of the business alike. If your product is not meeting licensing, certification requirements, the Food and Drugs Authority has the powers to take it off the shelves and to apply sanctions on you as a business. So to avoid all these penalties, sanctions, and even imprisonment, it's important that you operate within the legal confines of doing business in Ghana. And it's important for you to know all the requirements as a business person before you venture deep into production or providing services, and to avoid being at the wrong side of the law. Thank you.
Thank you very much, Madam Habiba Sumani. We are grateful. As I said, we are hard pressed for time, and so we're going to wrap up today's session. I've seen quite a number of us leaving our email addresses. We would also get in touch with Mr. Hochonyame, and then we have his contact. So when he gives us the permission, we'll share with those of you who specifically need to pick up the discussion from here. Thank you very much. As I said, it's been an engaging time. Andy Kisi, Philo, Isaac Boateng, Crab Billy, Ifwa Mark Jones, I think we answered your question. We had Xavier, Nate, we would get back to you and answer your questions. And we had 2 questions from from 2 anonymous attendees. We would get back to all of you on that. As I said, today has been insightful. It's been engaging. And we can see that we even have to continue the discussions from here. It is the Zenith Bank Ghana SME Business Empowerment Lab. The laboratory, we dissect the issues and we make sure that we come up with practical solutions. Yes, it's been insightful. Thank you, our resource personnel. This has been good. It shows in how people even want to have discussions after here, as well as requesting for your slides. So we want to say that thank you very much to Mrs. Habiba Sumani and Mr. Lawrence Hochonyame for your helpful insights into the topics for today. We are very much grateful. We would also like to extend our appreciation to MD CEO for such a vision, birthing such a vision. Thank you, ED. Thank you, ESCO members, for your support. And thank you, staff, our distinguished and esteemed customers and prospective customers. Till you hear from us again, it is the Zenith Bank Ghana SME Business Empowerment Lab saying adios. We will get back to you again. We would have the discussions again, and we'll make sure that your business grows. Sustainability all the way. Thank you very much.
Meet Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it. Meet Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it. Meet Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it. Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it. Meet Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it. Meet Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it. Meet Kwame, a tech-savvy guy who enjoys his life behind the screens. With just a few taps on the Z mobile app, he can send money, purchase airtime, check daily FX rates before he makes an online payment, and more. Z Mobile has made Kwame's financial life a breeze. Be like Kwame. Z Mobile. Easy does it.